Future Manager World, Avant-Garde Globality Authority.
Good morning. I am Bernardo Tosco, Secretary General for Future Manager World, and today with me is present Mr. Nicolas Milonas, Head of Bank Future Manager Global Division.
Hello, Bernardo. How are you?
Fine, you?
Fine, perfectly fine.
Thank you for being here. So, in the framework of Bank Future Manager, we are going to deepen the topic of risk management. Mr. Milonas, how is the risk management landscape evolving globally in bank and finance industry?
Interesting question. The risk management landscape in the global banking and finance industry is evolving in several significant ways, mostly driven by a combination of regulatory changes, technological advancement, and shifts in market dynamics. Let's talk about 6 key trends and developments. First, increased regulatory scrutiny. Post-2008 financial crisis regulations, such as Basel III and Dodd-Frank, continue to shape risk management frameworks. Institutions are now facing stricter capital and liquidity requirements, stress testing mandates, and enhanced disclosure standards. Second, integration of technology. The rise of fintech and insurtech is reshaping risk assessment processes. Technologies such as artificial intelligence and machine learning are increasingly used for credit scoring, fraud detection, and market analysis. These tools allow for real-time data processing and more accurate risk assessment. And of course, blockchain technology is also being explored for improving transparency and security in transactions, which can help mitigate certain operational risks. 3, data-driven decision-making. Enhanced data analytic capabilities enable financial institutions to better understand and quantify risks. The use of big data allows for more granular analysis of customer behavior, creditworthiness, and operational risk exposure. Institutions are increasingly leveraging advanced analytics to predict risk events, manage exposures, and optimize portfolio. 4, cyber risk management. As cyber threats grow, the emphasis on cyber risk management is becoming critical. Institutions are investing in cybersecurity measures and developing frameworks to address cyber risk, including incident response plans and regulatory compliance. The integration of cyber risk into overall enterprise risk management frameworks is becoming standard practice. 5, emphasis on ESG risk. There is a growing recognition of the financial risks associated with environmental, social, and governance factors. Investors and regulators are demanding more transparency around these risks, leading banks to integrate ESG considerations into their risk management strategies. Financial institutions are beginning to develop models to assess climate-related risk and their impact on lending and investment decisions. 6, market volatility and geopolitical risks. Increased market volatility, influenced by factors such as geopolitical tensions, trade wars, and changing monetary policies, is requiring banks to adopt more robust market risk management frameworks. Institutions are incorporating scenario analysis and stress testing related to geopolitical events into their risk assessment. In fact, to conclude, the evolution of risk management in the banking and finance industry is marked by a dynamic interplay of regulation, technology, and changing market conditions. As institutions navigate these complexities, a proactive and integrated approach to risk management will be essential in creating a resilient financial ecosystems.
Thank you very much for this detailed answer. So, what are the most difficult risk management positions to fill when recruiting in bank and finance industry, with special focus on Europe, of course?
It is very interesting question, and my clients are facing that issue every day. Recruiting for risk management position in the banking and finance industry in Europe can present, of course, significant challenge, particularly for certain roles that require specialized skills and experience. Let's talk about 10 of the most difficult risk management positions to fill, and then we can have some comments about each one. First one, quantitative risk analyst. Second, market risk managers. Third, credit risk analyst or managers. 4, operational risks managers. 5, compliance risk officers. 6, cyber risk analyst or managers. 7, model validation specialists. 8, enterprise risk management professionals. 9, regulatory affairs specialists. And 10, sustainability and ESG risk managers. Let's talk about the quantitative risk analyst. These professionals employ advanced mathematical and statistical techniques to assess risk. A deep understanding of quantitative finance, modeling, and programming language like Python is often required. The scarcity of candidates with these specialized skills makes these positions hard to fill. Second, the market risk managers. Individuals in this role are tasked with identifying, measuring, and mitigating market risk. They require a deep understanding of financial instruments and regulation. And given the complexity of the market environment and the rapid change in regulation, finding candidates with relevant experience and expertise is challenging. Third, credit risk analyst manager. This role involves analyzing the creditworthiness of borrowers and assessing the risk of default. Candidates must have strong analytical skills and a thorough understanding of credit risk modeling and regulatory requirements. Finding experienced professionals in this area can be difficult, especially those familiar with evolving standards like Basel III. 4, operational risk managers. These professionals focus on identifying and mitigating risk arising from internal processes, systems, or external events. The role requires a blend of strong analytical, project management, and communication skills, making it challenging to find candidates who possess all necessary attributes. And let's talk about compliance risk officers. As regulations continue to evolve, finding candidates who not only understand compliance risk, but also have the ability to implement robust compliance programs can be challenging. The legal and regulatory landscape in Europe is complex and requires a nuanced understanding of various jurisdictions. And we could talk about the next position. Every position is challenging. In addition to this specialized skill sets requirement, challenge in recruitment are also exacerbated by increasing competition for talent, the rapid pace of change in regulation and technology, and evolving risk frameworks in the banking and finance industry. Organizations often need to invest in training and development to bridge the skills gap in risk management roles.
Thank you very much for all the details regarding these positions. So, according to your experience, what are the 2 specific positions most difficult to fill when recruiting in bank and finance in Luxembourg, where you are currently based as the head of Future Manager World Bank Global Division?
In the banking and finance industry in Luxembourg, where I am currently based, 2 specific positions are often considered difficult to fill. First one, risk management analyst. Given the complexity of regulatory requirements and the increasing focus on risk management due to financial regulation, finding experienced professionals with the right technical skills and understanding of both local and international risk frameworks can be really challenging. Candidates must possess strong analytical skills, a thorough understanding of financial products, and experience with risk assessment methodologies, making this role quite demanding to fill. And the second one, compliance officer, especially with a specialization in anti-money laundering. As the financial sector continues to face stringent regulatory pressures and evolving compliance landscape, finding individuals with specialized knowledge in compliance and anti-money laundering practice is really difficult. Candidates need to have substantial experience in navigating Luxembourg regulatory framework, along with a deep understanding of international compliance standards, which narrows the talent pool significantly. This both position requires highly specialized skills and expertise, alongside the ability to adapt to changing regulation, making them particularly challenging to recruit for in Luxembourg's competitive finance environment.
Thank you very much, Mr. Milonas, for all the information about this insight on risk management.
Thank you, Bernardo. Thank you, everybody.
I would like to thank all those who followed us during the development period of this series of Bank Future Manager Talks. Thanks again, and keep following Future Manager World on our website and social media.